The Indian fintech ecosystem is the third largest globally and continues to grow rapidly, with tripling of unicorns, soonicorns and quadrupling of minicorns over the last 4 years. Now, the ecosystem has also matured significantly, with 35 plus fintechs at $500 million valuations compared to only 13 in 2020. A report by BCG and Z47, formerly Matrix Partners India, finds that the ecosystem is poised for exponential growth. Ritu Singh caught up with the authors of the report for more. Take a look.
What are the key tailwinds for the industry?
Yeah, I think when we look at the fintech industry, we say very often that it's somewhat in the middle journey right now.
Okay.
Which is to say, while there's been a lot of growth, we see a lot of further growth going to come from driving penetration, and this is true across all segments. Whether you look at mutual funds, we are only 20% of our AUM is 20% of the GDP, whereas it's the order of 70-80% plus in the global economies. If you look at lending, if you look at insurance, in all of these we see quite a large gap when it comes to penetration. So I think from a market and demand perspective, that's where we see a lot of growth coming from. In addition, there's also a lot of positive sentiment with all the progressive moves that the regulator has been taking on.
But is it a bulk of the investor focus, the fintech innovation focus, being on the payment side, much lesser on some of the other aspects that you mentioned?
Actually, I would say that, payments was something that, there was a decade of payments with the UPI movement happening. And a lot of, I think, now we see a lot many other segments like lending, like mutual funds also take, ride on some of the technology that's getting built.
Sure.
And we do see that the community in general is quite interested now to take it to the next paradigm of innovation, which goes beyond just, in the payment sector, beyond just payments, to also talk about compliant payments, security.
Is regulatory overhang, is that emerging as the biggest risk for the sector?
So listen, we are actually all here in this fintech ecosystem because we have a pretty progressive, constructive regulator. And I will say overall, regulation is a feature, not a bug. And I would encourage every...
No one's calling it a bug.
So every startup, and for PhonePe is a humongous company and actually very regulatory compliant. I think you should, as a startup founder, you need to say that if I need to become large and I'm actually handling retail money and it's essentially the common man's money, and I want to be systemically important, there is no other way for me to become large
without being compliant.
Without being regulatory compliant and having that regulatory cover. There will be a curveball every 6 to 9 months. I think most of the time the regulator is doing their job, because sometimes growth gets ahead of where risk and asset quality are, and so they're doing their job. But at that time, as a founder, you just need to say, okay, how do I use this as an opportunity to get ahead of my competition?
Not innovate, on the guidelines. And we understand, of course, the regulator wants to put guardrails around this innovation so the customers protected. I think that is the end goal. But Nisha, what sort of IPO pipeline should we expect in the coming year or so? How many more could we see listed on the bourses?
Yeah, as we've looked at the data around this, we've seen that between 4 years ago, 5 years ago, and now, there has been actually a 2x jump in the kind of regulatory filings that has happened. So there has been a fillip in India as well. And when we look at the scan of the global markets, we see that roughly once a company turns a unicorn, between 3 to 5 years is the ideal period for them to actually start going public. And in India, we're seeing now that a lot of fintech unicorns are actually crossing that 2.5-3 year mark. So we do expect a lot of fintechs, going that route. And, the survey shows that a lot of founders are actually very positively contemplating and building the capabilities in these fronts.
Well, that is, just to continue on that, actually, governance is one aspect of it. The other big one is profitability, because in the private markets, you perhaps may get away with losses, may not have been the #1 priority a few years back, but now increasingly the lens is on, what your unit economics are, isn't it?
Yeah. So, and our survey actually shows that compared to last time, 60% of founders are actually confident of hitting that profitability or are actually profitable right now. I think the lack of the IPOs so far is a symptom of the problem, not the problem. The problem is essentially we haven't had companies of that scale and that profitability. Now, I would say across the ecosystem, there's probably like 20 odd companies which are at that scale and are looking to prep to go public. Now, from the time that you start to say we are going public, it probably takes about a year. So I would say very bullish in the 12 to 24 month period.
You know, in terms of some of the defining trends or technologies that are going to shape the future of the growth of this industry, what would you pin it down to, the 2-3 trends?
There's a lot of demand on a founder to produce something that's not only viable and interesting for the customer, but also very compliant, and you can't think of compliance as an afterthought. And I think that's
an opportunity for RegTech?
Yes, absolutely. We see a lot of SaaS infratech players actually building that thought as a part of the design, and everybody now says that compliance has to be embedded in the design of what you take forward. It cannot be an afterthought.
A lot of the technology innovation that you're going to see in the next 2 to 3 years is going to be invisible innovation, which is that it is in the back. So if you look at it, this entire ecosystem, it's built on the DPI, which is the digital public infrastructure. It's invisible, but you experience it every day. And that's the next leap that is going to happen.
To another story.